This is a great guest that I'm excited about. Tom Spahn, he's somebody that when we connected, I was so excited in our pre-interview that I was like, well, how can we record that and share the world to all the people that are interested in where things are going. I wanted him to spend some time with you, so we invited him to speak. He's the vice president at Camber Creek and participates in all aspects of the business. Now, this is deal flow, due diligence, the transactions, and also the portfolio management. So he's got a strong pulse on where things are going. So Camber Creek is a venture capital firm providing strategic value, and not only capital, but strategic value to operating technology companies. So they're focused specifically on the real estate market. Just to name a few companies in the portfolio, you have Latch, Y Hotel, Funnel, PetScreening.com, TaskEasy, and so many more innovative brands. So Tom, welcome in.
Patrick, thanks so much.
So great to see you. I'm going to have a seat here, grab a sip of water, and so excited for this show. Appreciate you taking the time and showing up for our audience.
Likewise, it's a real pleasure to talk to you. I'm a little jealous of your chairs there in the studio, so I couldn't be there in person.
Yeah, well, next time maybe we'll have you in. We do that to tease everybody, but we're also in a world where we can do this. It's an exciting time to be alive.
Yeah, brave new world.
I really wanted to focus on this pre-occupancy, this during the tenancy, and then also maybe even the impact that these companies have on either workflows themselves, like how it impacts the way that they work, and then even on the financial aspect of things. So tell me a little bit of what you're excited about, what you're working on. A lot of the viewers maybe haven't had the opportunity to meet you.
Yeah, it's an exciting time to be in prop tech, just like your last guest said. We're really seeing a lot of companies across the entire scope of an asset's existence really get fueled by some of the new technologies that are out there. We've seen on the pre-tenancy side, we've invested in Bowery, which is a tech-enabled appraisal platform. We're investors in Notarize, which is really exciting. It's a remote notarization platform that it's really streamlining transactions across the real estate industry. And then Funnel is an exciting company of ours that's helping with lease management and the lease up period. And then during tenancy, we've seen a lot of innovative companies come along. Some in the ESG space, which is really exciting these days. Measurable, one of our portfolio companies, provides top quality reporting on ESG matters. And recently we invested in Untitled, which focuses on the supply side management of energy contracts, enabling some greener choices there. And then everything from Latch, which you mentioned already, and pet screening, Latch providing access control, and then coming soon, a whole building OS system to allow property managers to take more control over their assets. Pet screening helping with screening for pets, particularly service animals. TaskEasy, which is providing lawn service. And then you mentioned on the fintech side and financial products, we have a company called Flex, which is doing really exciting stuff, enabling renters to pay their lease payments over the course of a month, which better matches their cash flow to their ability to pay rent. And then Zebo, which is a new fintech company that's really providing a lot of financial services specifically tailored to multifamily and landlords in the multifamily space, which is really exciting.
Yeah, so
a lot of innovation going on.
Yeah, I'm sure. And that's exciting that you can go on. I mean, that's impressive. Tell me a little bit about, because the firm itself, like what you guys are excited about. And I think you guys are doing something a little differently. You've got a lot of, not just capital, but really the strategic part of that and why that's important, I guess.
Yeah, exactly. So we've been around since 2011. So we really pioneered the prop tech investor model. What really makes us unique is not only do our partners all come from real estate backgrounds, both on the operational and transactional side of things, public and private markets across all different asset classes. Almost all the investors in our fund are owners and operators of large assets all across the U.S. across all different asset classes. And that really gives us a great network to both during the sourcing and vetting investments. We like to include them in our investors in the process of vetting companies we're thinking about investing in, which helps us validate the product market fit. But then afterwards, we open up that network of potential customers to our portfolio companies, which gives them a ton of traction in a space that's notoriously difficult to get traction in. On the other side, the investors in the fund benefit from us essentially being an outsourced innovation arm, where we're going out and finding the best solutions to the problems that they're facing, bringing to the table the best tech solutions we've found, the most reliable companies, and getting them in front of people that are looking into technology innovation in the space.
Yeah, let's talk more about that, this innovation arm, because that's interesting. I mean, you have groups that are 1,500 units, 20,000 units, 200,000. I mean, it's all across different platforms. And so where do they even begin to think about innovation?
Yeah, exactly. It's really hard for small organizations to have the manpower, and often for large organizations that are maybe a little more set in their ways, it's tough to get that innovative flavor of looking companies, I guess you could say. And that's where we look at companies all day, every day in the space, and really have a clear sense of what's going to work, what's going to be a good product market fit. We get a really strong sense of the teams that we're backing. We really help bring that discipline and diligence, as well as the broad scope of looking at all the companies in the space. Whereas an individual asset manager might be pitched with one or two technologies, we'll look at 20 different companies before we actually put our seal of approval and invest in the leader in the space, in the category.
Yeah, I would imagine you are getting access early before even the world sees stuff, because they're in different stages. But what are you seeing that's exciting about where things are going in terms of the efficiencies that are being created, or what are some things that we should be doing to think about the business differently?
Yeah, we're seeing a lot of improvements on the workflow side of the house, on the back end. Previously, there's been a lot of data silos that made data sharing fairly difficult across the various pieces of the organization, as well as during the different life cycle phases of an asset. And we're seeing some of those breaking down as more platforms start accessing more of the data that's available and breaking down those barriers. We're also seeing, with that data, we're seeing a lot of front of house improvements where there's a lot more focus on tenant experience and tenant engagement, and providing tenants with the ability to really engage with their community, which is something that folks are really desperate to get back into after COVID. So we're really seeing that as an area of focus. And then we're seeing some companies that really think about the future of buildings as they're going to be after the COVID world, and ways to increase utilization both on the multifamily side of the house and commercial buildings. There's a push towards flexibility and more flexibility and utilization increase through technology, which is really exciting.
Yeah, and you might have heard our earlier guest Fatima say, think big, but act in right now, or not act small, but what's right in front of us. How does an operator, and I don't even know, how are you guys how far out are you thinking about things? And because we have to also deploy this, given this current state of things, with respect to timing and other aspects. How do you guys see all of that?
Yeah, it's a great question, and I think our thinking has probably changed a bit since the pandemic. I guess it's more uncertain on the commercial side of things, where it's hard to tell a month from now what's going to be happening rather than right. A year or two. I think what we've seen is a real trend towards maturation in the prop tech space. A lot more companies are coming along with really strong founding teams that combine real estate backgrounds and tech backgrounds, whereas in the past you would have a founding team with primarily tech backgrounds and didn't necessarily understand the real estate space, or vice versa. And now it's a really nice mix of folks that we're seeing across the board. I think also what you're going to see in the next 3 to 5 years or so is some consolidation in the space. There's a lot of tenant experience apps. Some will probably combine and become bigger and stronger, and others will start focusing on particular types of the market and specialize. So it's going to be either consolidation or specialization, I think. I think you're seeing a big push towards, paradoxically, I suppose, contactless services, such as package delivery or access control, virtual touring, that type of thing. Yet at the same time, more experience-driven tenant experience apps and tenant engagement. So it's both the craving community and also staying safe and distant.
Yeah, I imagine as an operator, and I'm sure you're in the space where you're hearing about things other people aren't hearing about because they're running a real estate business in some aspects. Having that balance of the real estate fundamentals and the understanding the technology almost layering over the business. What should executives be doing to sort of either, can you evolve them, or are we growing people up into these future leaders? Where would they stand to invest in their own path forward, I guess?
Yeah, I think you're seeing a new generation of leaders come along in the real estate space that have lived and engaged with technology their whole careers. So I think traditionally real estate as well as construction has really lagged on the technology side. And I think that's becoming less of the case. I think the pandemic actually, for whatever reason, sped up a willingness to consider new technologies and consider changing workflows and changing the way business is done. And I think we're seeing more of a willingness of executives to take the time and engage, whether with us or with a specific startup, on new ways to do business and new ways to inject technology into their businesses, which is really exciting.
Yeah, and I begin to think about what's in front, the obstacles that are in front of us. Are there any issues or obstacles that if we knock down, we would accelerate innovation in multifamily? If that be, I also think of the airlines where Southwest made a change to even how they board passengers. I mean, you're essentially training customers to act in a new way. I mean, it was more behavioral, but are there things that are in front of us that if we knock them down, we wouldn't be saying we're behind in the industry?
I think it's a lot of incremental things. I don't think there's one big as you said, obstacle standing in the way. I think it's just the willingness to consider new technologies, particularly ones that are marginally better, not necessarily game changers, and make some of those changes and invest in the change management. Because for any organization, large or small, change and transformation is hard, and it's an investment. So the willingness to embrace some of the change, put in the work to change the way business is done, to really bring on the benefits of new technologies, I think is what's really going to transform the industry. But I think we've come a long way over the last, certainly the last year and a half or so during the pandemic. And before then, Camber was founded in 2011 when prop tech wasn't really a thing. And right. Over the course of the 10 years or so, particularly in the last 3, we've seen an explosion in the number and the quality of companies that are coming along, which is really giving executives in the real estate space a lot more options and a lot more mature options they can be sure are going to be around longer than some of the earlier iterations of this.
Yeah, I look at professional sports and brands that have built legacy brands, that people grew up in generation after generation. My dad took me to this game, and they sort of had this brand equity to a company, really, right? And right. I look at how they build their teams. They have scouts. They go where the talent is. They go find it. They pull them out, and then they invest in that talent. Ultimately to show up, because if you're not winning, then no one's going to follow the team type of thing. But they're not necessarily always concerned about the fan experience, but they're focused first on getting the best talent, developing that talent, and therefore the outcome is fans have a great experience because they're winning. And I think about real estate fundamentals in similar ways in that, as we shape, our companies, you mentioned the word investment. This is in many cases not an expense, some of this technology, because it's improving a layer that maybe we're not even evaluating yet on the, we look at cap rates on NOI, but what is ultimately going to drive that number? Technology obviously influencing it, and we probably don't have as much data as we do with, rents and utilities and those types of things. But when I see the word investment or acquisition, our real estate operators respect that. They understand, like, okay, we're going to write a check for $80 million or at least go into debt for it. Right. Then, okay, we've got to get some third-party reports. We've got to check all the roofs. We've got to we've got to fly in and get all over this thing because we're making an acquisition. Are you seeing the same type of interest in the investment in technology with the due diligence as something of buying the physical real estate?
Yeah, it's really interesting. You bring up a really great point. The real estate industry is founded on data, and there's very, very clear metrics, very clear investment cases. It's pretty cut and dry, cap rates, et cetera. Very complicated, but certainly there's always data to hang your hat on. Technology is, in a lot of cases, very different because it's dealing with the tenant experience, for example, where it's harder to get the data and prove out the case through just a pure ROI calculation. I think that'll probably change over time. But for example, bringing a certain type of amenity to a building, it's very hard to tease out the data that shows that that's what's driving someone to sign another lease or will make people willing to pay a little bit more for their rent. So I think there's some work that needs to be done on picking out the right metrics and being able to track those metrics and tying that back to decisions that are made. And I think a little bit of it's going to be faith-based in that there's a sense that technology and delivering these experiences to tenants are going to improve the bottom line, the ROI. It's just tough to tease it out in a data-driven case initially.
Yeah, and you have some great brands that are moving down that runway fairly strong. Are you learning anything about, how do you influence an operator or somebody to be willing to try something new? Are you learning anything about this?
Yeah, I think so. Certainly, the pandemic has opened a lot of minds, which is great. I think we're in a really unique position because having been around for 10 years now, we've built a reputation in backing winners. We've had no companies actually fail, and we work really hard with our portfolio companies, and we're very hands-on. And we're also very cautious when we invest and when we bring technology companies out to our investor network as a potential solution to them. So I think that our reputation behind the companies we recommend really helps in building that trust and having operators be willing to try the technologies we bring in front of them.
Yeah, it's that safe, and I think an earlier guest mentioned, like, some of the operators, if they make the wrong decision, I mean, there's a lot at stake for them, as maybe they don't own the company. They don't want to unwind something that they're not even involved with. It's an outside party. What are the due diligence items we should be asking these companies as operators? Do they have enough runway? Are they profitable? What are those types of questions, I guess?
Yeah, that's a great question. I think team is really important. Nearly every startup it pivots once or twice during their life cycle. At least the great ones do. And you really need a team in place that's going to be nimble and able to deal with challenges that arise and meet the needs of their customers, the operators. The other thing we think is really important are traction in the space to validate the product market fit. and then certainly runway plays a big role as well, both purely capital and then having investors that are willing to back them on a continuing basis. Most companies these days, if they're growing well, are going to need to raise capital every 18 months or so to 2 years. So it's not necessarily that you're looking for a company that's got the cash on hand to survive until it's profitable in $1 billion company. It's more looking at the investors, looking at their conviction, and speaking to the investors as well, and get their thoughts on the company and the path that the company has in front of it.
Yeah, really, and I tend to try and remind myself, don't talk about what you don't know. But so I'm going to ask a question, and maybe it's the wrong question, but when and I'm going to use my experience from even the early real estate days of the acceleration. I mean, we had brands that were growing 30, 40,000 units, and then their whole model was, well, we're raising capital, and the business model was, as long as we were doing deals with the acquisition fee, the loan fee, the disposition fee, everything was good. And then all of a sudden the capital market stopped, and so it's like, well, we got to operate on a P&L now, so that changed, and it flushed out a lot of those scenarios. And so I'm wondering, like, as you look at companies, do they need to be profitable, or do they just need to be able to raise the next round? And then, or if that money or liquidity stops, like what impacts those decisions, I guess?
Yeah, it's a mix. It's we don't really invest in the companies that are the say the moonshots, where it's either a make or break. Very often, we're much more cautious, and we like companies with a strong growth plan that's not contingent necessarily upon raising a ton of money at crazy valuations. We really focus on what the plan is for the next 12 to 18 months. How reasonable is that plan? And we model out various scenarios every time we look at a company. Certainly, we look at the downside scenario very carefully. So we make sure that no matter how the company fares, they're going to be able to survive, even if the capital markets tighten up. And we saw that with Y Hotel, which was, who would have foresaw the pandemic a year and a half or so ago. But because they had a strong leadership team in place and were ready to respond and do what they needed to do to weather the pandemic, they're going to come out of it just fine. And it's making sure that the company has the leadership in place and the planning in place and the product in place to be able to survive those downturns. It's really important.
Yeah, no, it's powerful. So tell me, I would love to talk a little bit about that leadership, what you look for. Take me through maybe a conversation or pitch meeting, whatever that shapes up or looks like. What are you looking for in that team?
Yeah, it's great question. It's really tough to put your finger on what it is. There's you develop a keen sense for a good, strong leader. Part of it is the way they speak about the business. You can very quickly, we see companies day in, day out, so it's very, very easy to see through the bluster and the hype to what's really going on. The numbers don't lie. So it's really great when a founder is open and honest about their numbers, the vision of the company, and is transparent about the problems they've had, the challenges they've overcome, as well as the outlook for the business in the future. We also like a really well-rounded team, so it's great to have a great founder, but or two, but having a strong team built around them is equally important. So it's not just a single founder leader. You need a strong technical team, a strong sales organization, and the ability to recognize what the organization needs going forward. We sometimes invest in fairly early stage companies where there might not be the strong sales team, for example, in place, but how the founder or the CEO both talk about how they're going to build out that organization and how they're going to structure it, and seeing how thoughtful they are about that strategy is really important to us.
Yeah, and I opened up our show with some first principle thinking and just for more of an exercise, and then having sort of a fresh perspective of a beginner's mind in the industry. Is it helpful to have somebody that's a founder that's outside the industry, or do you see some of these coming up? They've experienced so much, they get the ideas through coming up through the industry. Where's the balance there, I guess?
Yeah, I think the best companies we've seen have a mix. They have folks from inside the industry and outside the industry, and I think we're seeing more companies that are founded like that. I think real estate is just such a unique industry, and the challenges are so unique, particularly on the technical side, that it's important to have some strong industry connections and strong industry experience, so you can navigate some of those peculiarities, shall we say. But I think we're seeing a lot of these companies now being able to attract top talent from adjacent industries as well, which is really helping fuel a lot of the really interesting technical innovations that are happening in the space as well.
Yeah, and I think about like medical or even healthcare. I mean, it's like what we see as patients, but then there's the skilled doctors, and then there's the hospitals and the networks and insurance. There's so many and restrictions of data and all. I mean, I'm glad I'm not in the medical space, but I know the operators probably feel a little bit restricted in they want to do things in many cases. Maybe they feel they can't, or they don't feel safe, or what have you. Are you paying attention to, and I know this is a silly question, but the customer and how important of the sort of customer of tomorrow into those conversations you're having with those founders?
Yeah, definitely. It's super important. And it's really important to have that product market fit and have the founders really understand who their customer is and what their customer needs, and very, very particularly what they need. And a lot of times the founders and the company itself can help with the justification the operator needs to make changes, because the best founders understand or have come from that position of having to justify the technology expense and the workflow changes and the transitions and the change management, and can help frame and justify the approach to actually embrace the new technologies. But it's very important.
Yeah, I guess as we shape up some of the things that we're working on, the things move so fast that how do you keep that pulse on what's happening without I mean, I have kids, so it's a little easier because I'm just watching and I'm like, I'm having better conversations with them, texting in some cases than they don't want to call, and I'm like, pick
right.
up the phone. Like, you're old, like. But so tell me some of the things that I guess you're excited about next. I'm not asking you to make any predictions or anything like that, but where do you see the opportunities going forward?
Yeah, it's wide open. It's not a great answer, but we're looking at a lot of interesting stuff in the ESG space. I think there's going to be a shift to both closer monitoring and more quality data and more quality decisions based on the data. And like I said, our portfolio company Measurable is really helping drive that change to really high fidelity data and data-driven decisions. I think you're going to see a lot of evolution in the smart building and smart asset space. There's been a lot of different platforms out there rolling out, but I think some are starting to coalesce and emerge as real smart building operating systems. Particularly Latch's new Latch OS is really exciting, and I think it'll unify a lot of the various devices that are out there. In the construction space, I'm excited about prefab. We've looked at quite a lot of prefab companies and in the future building. I guess Industry 3.0 is the new term. I think that's really exciting, and I think there's going to be a change, particularly as construction prices go absolutely through the roof, particularly recently. I think there's going to be a lot of change in the way assets are designed and built, and that's pretty exciting as well. And then I think as the world adapts to the new realities of more people working from home and people moving out of dense urban places to more suburban areas. I think there's going to be a reshift of how buildings are utilized, how they're thought about as assets that are changeable and not necessarily just a fixed single use, single purpose, single use platform, so to speak. I think that's going to be a really exciting change and development.
Very, very cool. For those companies that, you're very careful, like you said, with your investments and how you see the opportunities. For those that sort of, let's call it either A, don't make the cut, or either are just going down a different path. Maybe they're just starting self-funded or just P&L out the gate. They're incrementally growing their business. And, how do we incorporate some of the things that you've benefited from in terms of that feedback loop with you said, the early adopters, or maybe even have the use case that minimizes the risks you take because you have, customer base and that type of thing. How can we, I guess for even personally for me, like we're forming this Innovation Council advisory group where some people have tried to do some of those things and it runs flat in many cases. And so we're trying to do it to where we can get the feedback loop, right, from the customer. What are the challenges? What are the problems? But at the same time, not everybody is going down the path where they're raising money. And so how do we develop and how do we understand product in that aspect? Is there any advice that you can give me even around how to foster that connection between the operators and the people that are really trying to do some exciting things in a meaningful way, that maybe some lessons that you've learned and benefited from?
Yeah, I think opening the dialogue and having a running conversation is really important. We quite often talk to companies for years. It's starting from when they're way too early for us to invest to the point where we're ready to make an investment. We're not, and we'll keep that relationship going because we're always learning from both the companies we invest in and the companies we don't end up investing in or haven't invested in yet. And I think bringing in operators to that conversation as well is important and very valuable. So what I think you're doing, what it sounds like you're developing is really great because it'll be a great forum for that shared learning. There's a lot of information that operators have that it's hard to convey to some of the companies that are out there without, say, doing a pilot or something. Whereas if they just had a running dialogue and a place to talk and iterate on products, it'd be really valuable, I think, on both sides.
Yeah, just even in the acceleration. Paul asked a question from our audience, Paul Zulo. Do you see the main PMS companies retaining sort of their position in the marketplace, position of strength, being that, or do you see sort of smaller companies rising up and changing?
That's a great question. It's I see for the short term the maintaining their strength. It's really tough for some of the smaller companies to break into that space. I think over time, either the larger players are going to acquire some of the smaller companies and bring in those best practices, or you're going to see some notably better competitors come along and really challenge for dominance. But I think it's a multi-year process that I don't think is really, we're not very far along that path at this point yet.
Yeah. It's an ongoing conversation. I know that, and it's, we heard it earlier. It's like the path to success, is you have to be able to be friendly and play with others. So then ultimately the customer gets what they want. And so are there any other things that you think operators should be thinking about right now in terms of either the customer or investments that they're making in technology?
I think the big thing is as we've seen it's to keep an open mind and to be willing to try new products and new solutions that come along. I think there's a lot of exciting developments, and I think to not at least try and have the conversations and think critically about what type of technologies you're using and how how the technologies that are out there can benefit the business is amiss. So I think it really helps to be engaged. And speaking to folks like us and various other innovation sources and resources is really valuable to get a strong sense of what's available and what can benefit the business and bottom line.
Yeah, and for your brand, Camber Creek, what's ideal victory for you guys? Who are you looking for? Who are you there to serve? I mean, I have a pretty good idea about the brands you've already worked with, but what's the victory look like for you guys?
Yeah, the really adding value both to our investors, both in terms of top quartile returns, continuing that trend and that trajectory, as well as being, like I said earlier, the innovation arm or outsourced innovation source for our investors to really help them embrace the best technologies and really drive their business forward. And then adding value to our portfolio companies, working closely with our founders, driving customers and innovation, and really helping to supercharge their growth in the industry and getting a lot of exposure to our investor base is really a win for us. We look at everything we do in the lens of can we add value, both on the investor side and the portfolio side. So when we can do that, we consider that a win.
Awesome, that's great. One of the questions I like to often ask is, and when I'm playing sometimes in a league far beyond my own intellect, is what are the questions I should be asking, maybe that I'm not asking, or anything that come to mind?
Boy, that's a tough one. I think you've done a great job.
Yeah, we've gone a lot of places real quick, and we are coming up on the end of our time together, and I'm sure people are going to have some follow-up questions. I've given everybody out a way to text me. If you do have any follow-up questions, you can text me 480-780-2611, those of you that are tuning in and watching live. Now that we've approached sort of our last runway here of our time together, are there any final thoughts you want to leave our viewers with?
No, this is great. I really appreciate being able to speak to everybody. It's a really exciting time for property tech and real estate in general, as we're really starting to see a lot of exciting technologies change the face of the industry. And I think we're very excited to be at the forefront of it and leading some of that change.
That's amazing. Well, appreciate the time together. Awesome discussion, and I know the values been landed on people to think differently, think bigger about what they're working on, and hopefully this has been amazing for you too. So let's stay in touch, and we'll see you maybe in the next show.
That sounds great. Thanks, Patrick. Really awesome. Appreciate it. Thanks, everybody.
See you later.